Stocks burst to new records. At the same time, high-yield bonds, small caps, and the equal weight ETFs are still dragging, and we'll see if this makes any difference in the general outlook. We will also look at a huge win for the subscribers. The firm is called Cloudflare. It's a pretty familiar name. And we'll look at how we traded this stock. And we will also look at gold and gold miners, especially as the gold miners seem to be leading, or at least about to lead gold lower. All this and more in today's edition of MasterChartsTrading.com market recap for Friday, February 9th, 2024. As always, please keep those likes, those comments, and shares. And if you have any questions going, please don't forget to hit the like button especially. This is what keeps this channel going. I truly appreciate all of the likes, all of the shares, and all of the comments that you make. So thank you very much for them. If you're a subscriber, stay tuned. We'll be covering quite a bit of various securities in the members only section. Note that market breadth, crude oil, and Bitcoin will be covered in the members only section. We will also cover various ETFs, namely various the large caps ETFs, but also we are going to have Airlines and Cannabis covered in this section. Ford is coming up with an interesting pattern, as well as some of the various small caps and the speculative type of firms, such as C4 Therapeutics. I have a position in that. Century Aluminum, Lyft, as well as a very interesting pattern was for Block is incorporated as well. Throughout the presentation, I'll be using my proprietary MasterChartsTrading.com market the indicators for trading. You can see them on this chart, this green, blue, red, and yellow lines. You can have them the same lines on your chart on tradingview.com. Once you sign up on my site, I will open the door for you on TradingView. So sign up on TradingView for a free account, and then once you do that, come back to Master Charts Trading, and I will open the door for you so you can have the same lines on your chart. We're currently looking at S&P 500, the index, and notice that today we have closed at a new record. 5,026 is the new record. We closed today. So we're long. I am long. I bought S&P 500 ETF SPY. Here's my position. I bought it back in October of last year. A very nice move, obviously. I have about half of my position left. I did take profits, so we're about 19% up since my position was opened. Overall, a extremely strong trend. Somewhat, I mean, it is. I thought it was overextended, back in December, early January, but no, we continue higher. So overextended, overbought means strong. Okay, overextended and overbought does not mean we're going to collapse. Yes, it's overextended. Yes, it's overbought. That also implies that a lot of people want to own it. So stocks are obviously something that people want to own. And in this case, we're, doing the same thing as pretty much everybody else. We're buying the stocks. We're not buying the stocks now, or rather we're buying individual names. But for example, this ETF, SPY, S&P 500, we bought it back in November, even October of last year, 2023. Right now we're sitting in the position, so we're basically holding. Note this action here from a few days ago. I pointed this out to my subscribers. I'm going to kind of zoom in on it a little bit. So it's a classical triangle consolidation. I want you to look at this 3 candlesticks: February 2nd, February 5th, and February 6th. So February 2nd, big candlestick. February 5th, the candlestick was entirely within the range of the February 2nd candlestick. So that's called an inside day. So February 5th is an inside day relative to the February 2nd candlestick. But note that also the next day, February 6th, we also had an inside day because the candlestick was entirely within the range of the February 5th candlestick. So we have 2 inside days in a row, also known as a triangle consolidation, and we had a breakout. I mean, it's a pretty clear breakout. So I pointed this out to my subscribers. It's not really something that we trade, but it is something that people, look at. And for now, we're just, going with the flow. We're doing what the market is telling us to do, which is buy on pullback. Pullback was, we had a high back in July 2023, a relatively long but not very deep pullback that got us back down to the blue support resistance line. I can also turn on the 200-day moving average. You can see that my lines are not really made using the 200-day moving average, but we got down to that area. So overall, that's where we buy. We buy around the blue support resistance line when we have a trigger, which is the stock has moved below the blue line and then moved above it. So this is exactly what I did, and I'm still sitting in the position. So overall, no changes. And if you're long, congratulations again. I would continue to hold long, and eventually we will see a pullback. We just don't know when. QQQ Nasdaq 100 ETF definitely outperformed pretty much anything out there right now. Note that alert to my subscribers was sent right there where I'm hovering on 6th of April of 2023, almost a year ago. This alert was good for 38% for QQQ, so big move, and a very nice, just continuous uptrend. I however bought QQQ even earlier, back in January, over a year ago now, of 2023 rather. And I actually am still holding that same position that I bought back in January 2020 at around $280. Currently we're at around $435. I'm still holding, so that's 56% gain in a little bit over a year. This continues pretty much, and if you hear the news, there's this Magnificent Seven, Amazon, Apple, to a degree Tesla, there's a few other stocks. So the thinking right now is that those large cap stocks are driving the stock market higher, while the average stock is not really participating as much as those big magnificent stocks. So to see if that is true, we need to look at something called an equal weight ETF of S&P 500. So ticker symbol is RSP, equal weight ETF. So we are looking currently at RSP on daily chart. We have been hitting 52-week highs just barely right there. We hit a 52-week high, and I think today we also hit the 52-week high. So it's not terrible or anything of that nature. It's a good thing. However, if we look at a weekly chart of S&P, actually, let me come back to S&P 500 in a second, but let's look first at RSP, the equal weight ETF. So the equal weight ETF has not yet hit an all-time high. We're so close, but we haven't done it yet. So this is a weekly RSP, weekly chart of RSP. Note that on Monday, the 3rd of January 2022, so 2 years ago, this security hit a high of 159.11. Okay, I'm reading it off there. Today, we hit 159.08. So we're, 3 cents away from all-time high. So it's, it's making me feel pretty good. Ideally, we should be hitting highs together with equal weight ETF and the regular market capitalization based ETF like S&P 500 ETF SPY. It hasn't yet happened, but we're pretty close. So what this is telling me is that yes, the Magnificent Seven are definitely driving the stock market higher. We can see there's new highs, new all-time highs. But the average stock is also participating, yet to a lesser degree. Another issue that I'm still looking at, and it is that of high yield bonds. So as I have been pointing out, high yield bonds correlate highly. This is a correlation coefficient down below here to the S&P 500. So they correlate highly to the S&P 500. In other words, the high yield bonds move together with stocks in lockstep. Ideally, high yield bonds should be hitting also all-time highs. However, they have not. All-time highs are actually they were hit right there in 2021, December 2021. So we're approaching that level for high yield bonds, but we haven't yet hit that level. We are hitting 52-week highs for sure, but we haven't hit all-time highs. So even with the 52-week highs, note that right there on the 27th of December of 2023, we hit a 52-week high, and so far we haven't hit another 52-week high yet. So this is called a bearish divergence. It's bearish relative to the S&P 500. Will it mean anything? Will it play out? It's really difficult to say. However, we are going to also look at various market breadth indicators. So notice we have put to call ratio. So this is options activity. We also have 200-day percentage of stock above 200-day moving average and bullish percent index, which we will cover in the members only section. And they are also showing a similar type of divergence. This is a bearish divergence. Eventually, it will need to resolve. Either stocks will, either the market breadth, so in other words, are the stocks all moving together, or are they only a few stocks moving the stock market higher? And so we will need to look at that and see if the market breadth is going to be contributing positively to the stock market movement or not. For now, this bearish divergence still continues, and it hasn't really resolved up or down. So two ways to do it is either for the divergence to disappear by, for example, high yield bonds will make an all-time highs, and market breadth will move up together with stocks, or stocks will pull back and the bearish divergence will actually play out. So we will be watching for that. Here are small caps. I wanted to just briefly point out small caps, IWM. They are definitely underperforming. Let's go to the weekly chart. So definitely underperforming, but not like horrendously underperforming. We're still doing 52-week highs. We're just pretty far away from all-time highs, and all-time highs were set in November 2021. So again, this is the divergence I was referring to, is that large caps especially a few of the large caps are driving the stock market higher, but we have small caps that are dragging, and we're 18% away from all-time highs, while S&P and QQQ is at all-time records. So this is the divergence I was referring to. Ideally, we should see small caps catch up and then break higher. This will definitely drive the rest of the stock market higher. I wanted to briefly point out this right here. So I wanted to show this pattern. Okay, so this is S&P 500 on the weekly time frame. So weekly just means each candlestick is 1 week's worth of activity. And I'm showing you this pattern which started here in July 2023, where I'm hovering. The bottom was on October 2023, and the top right here in December of 2023. So it's like a big V kind of pattern. So notice that when we broke out of this pattern this is an all-time high to new records on the 11th of December, we are continuously making new records, and we haven't really pulled back at all. So this depth of this pattern is around 480 points or so. And so one way to figure out how far we are going to go, how high we're going to go, is to simply look at the depth of this pattern and see if it will be duplicated in the upside. And by and large, it's happening as we speak. We're almost at that level. So the depth of this pattern is 487 points, and we are almost there. I mean, we moved 400 points. So we need around 87 more points is when we will reach the height or the depth of this pattern that I just highlighted. I think at that point we will see profit taken because this is such an obvious pattern that pretty much everybody will see, oh wow, let's just take some profits. And perhaps this is what we're going to see, is that finally we'll see like sideways to down action, and then the bearish divergences that I was just telling you about will play out. I think it will be a healthy thing for the stocks to pull back. So, don't really feel bad, but, if you have profits, definitely preserve them by potentially taking profits. So basically, this is what I was trying to say. Now, let's move on to a very cool trade that we did here. And this is Cloudflare, ticker symbol NET. Okay, so this is basically the way we look for stocks, and especially we look for stocks that are about to break out. So this Cloudflare thing, it did go pretty high back in November 2021. There's a record. I believe this is a record. Let me see. Yeah, it's a record in November 2021. Then it completely unraveled, and I believe hit not an all-time low, but very close to all-time lows. Just continued to move lower. Finally, right there in May of 2023, hit a 52-week low. And then it sort of stopped. It began to rally. And right there, where I'm hovering, on the 30th of May, see, I can tell you the exact date because I have these indicators here, this blue line, and this is what I really need to know. Did the stock close above the blue line? Do I really need to know anything else? I mean, we can look at earnings. At the time, they were 0.08, okay? And what about next earnings at the time? They were 0.1. So at the time, in May of 2023, the only thing that I knew fundamentally, well, I mean, I'm sure there were other things fundamentally about this stock, is that the earnings were okay and they're going to be okay in the future. it didn't really tell me anything about potential breakout. However, all we needed to know is whether or not the stock has indeed closed above the blue line, and that means we have changed our outlook from down, from bearish, into bullish. So these are actual alerts. I sent out 4. One on June 30th, one on 25th of July 2023, another on 8th of August, and another on 23rd of August 2023. 4 alerts. For a while, nothing really happened, and we traded sideways, but then we finally popped higher, and right there, on 14th of November, we reached our target. So our target is basically around the green line. So at this point, back in November 2023, I sent out to my subscribers that I would move my stop to entry and potentially take profits. And basically at that point, it continued higher, and we're still sitting in the position because we're trailing at this blue support resistance line. So I would have probably taken profits right there on the 3rd of January of this year. But then I would have been still sitting in this position, and notice what happened today. Huge move higher, around 20% pop higher on earnings. I mean, they're slightly higher. They're pretty good earnings, but do they really correspond to such a huge move? Maybe. In any case, this is the type of trades we do here at MasterCharts Trading. You can see we just simply buy around the blue line, sit in a position, and we're gonna hopefully get a very nice move in our favor. So congratulations, that's a 77% move. Alert was sent at around $61. We're around 108. So this is basically the way we trade. To trade the way we do here at MasterCharts Trading, you need these indicators, which you can have on your chart. This green, blue, red, and yellow line. If you don't want the indicators, just simply sign up for my newsletter. All right, let's move on to the dollar universe. Dollar is currently attempting to break out above this blue support resistance line. So when or if a security breaks above it, we will say that it is now in an uptrend. So when dollar is in an uptrend, by extension, gold should be moving lower. And so here is gold. Gold made a new all-time high back in December of last year. Big rejection candle. Notice this big shooting star candlestick on the 4th of December. Sideways trading. And this is what's happening right now. Gold is trading right around the blue line. Dollar is trading around the blue line. So if dollar breaks out higher, it would imply dollar is in an uptrend. Notice the way this formula works. It's XAU divided by USD. So gold divided by US dollar. If the bottom part of this equation will get bigger, dollar will move higher. This currency pair will move lower. So I'm waiting for some sort of a resolution. It does look like gold is about to just collapse lower here. Another reason why I think gold will be moving lower is because of gold miners, GDX. So gold miners are just horribly underperforming. They're next to 52-week lows. Notice how they're moving lower. They're around the yellow line. Gold is around the blue line. So this just means that, to me, this means gold miners are leading gold lower. I think we're about to see some sort of a move on gold to the downside. I don't think, it doesn't look like we're going to rally from here unless something weird happens and dollar just stops here and collapses. And doesn't look like dollar will collapse. From fundamental perspective, I'm seeing Federal Chairman Jerome Powell acting like he doesn't want to, devalue dollar. I think he wants to kind of just keep it as is, or maybe strengthen it. So if dollar strengthens even a little bit, gold will collapse. And so we're watching gold. We're watching gold miners. And then we'll see where this goes from here. That's it for this week's recap. Please head over to MasterChartsTrading.com, click on sign up for one of the products. So again, I have the two products and one bundle, trading indicators. So these are the lines in the chart. You can trade pretty much anything under the sun, using them pretty much on any time frame as well. Just you need to follow some rules, and they're easy rules. Indicators are available for TradingView. You only need a free TradingView account to enjoy my indicators. Newsletters, I send out daily alerts about various securities that we trade, and I send out weekly newsletters, weekly videos to my subscribers. So for example, this week we will cover quite a bit of various stocks. You can see market breadth, crude oil, and Bitcoin will be covered in the members only section, as well as many other securities. And I think the best deal is to get both trading indicators and newsletters. And currently they are on sale if you get a yearly subscription at only $49.95 per month with a yearly subscription. You can also get monthly subscription, but the prices are somewhat higher. That's it for this week's recap. Please don't forget to hit the like button, subscribe to this channel, share this video, make a comment. Thank you for watching, and have another great trading week. Bye-bye.